Hey everyone, we are live with Liberty and Finance. Thank you so much for joining us for this live stream on Liberty and Finance with Steve Penny from silverchartist.com. Steve, thank you so much for joining us today.
You bet, Elijah. Thanks for inviting me on.
Definitely. It's great to have you. And really what I wanted to talk about first is, we ended the month of June and this was a pretty interesting month for precious metals. Not very good month for a lot of the precious metals. The gold and silver both fell quite significantly. Your perspective kind of on the price action we saw this last month?
Yeah, going into the end of May, gold had a really nice bounce, and same goes for silver, really the whole precious metals complex. We had a nice bounce. We started to get pretty overbought, and we've been telling our members, I think we are due for a pullback. That RSI on gold was getting pretty overbought. But I'll admit, I did not expect this much of a pullback. So June was a rough month. And, it's also worthy of note that June is historically the worst performing month for silver, and I believe for gold as well. So from a seasonal perspective, it's not uncommon to see weakness in June, but this is a little bit more than many of us expected, including myself.
Now, you've recently stated that silver is clinging on to key support. If you kind of want to share with our viewers what levels silver cannot break below, if we want to have it not fall further.
Yeah, absolutely. And I'll go ahead and share my screen. And just verify with me that you can actually see it.
That is perfect. Yeah, thank you so much.
Excellent. Yeah, so this is a 1-year chart of silver. And, I like to keep my charts pretty clean. So this one has a little bit more annotations on it than I prefer, but I feel like I put everything that's significant on here. And we can see right here, this lower green uptrend line right here. That goes back to last June. So this is a 1-year uptrend line. And every time we've tapped this, support has held. And what's interesting right here is this green uptrend line coincides perfectly with the 200-day moving average, which is what I believe is the most used input into those institutional trading algorithms that really drive this market. So we're clinging to a confluence of support here. And from a traditional technical perspective, I would expect that support to hold. However, I am in the camp that I believe silver is heavily manipulated. And when I look at this chart through the lens of like a bankster looking to manipulate the price lower, you got to think they're chomping at the bit to crash that support. And if they do, the next support down below there is all the way down at like $23.75 or $24. I'm not predicting that, but I am mentally prepared to see one more flush lower. That does remain an outside possibility.
And what then would be maybe the next level of support for silver if we did see a breakdown below that level?
So 23.75 or 24. Now, if that were to fail, I mean, we could go all the way down to $22. I do not expect that at all. Anything is possible. But even if we did fall all the way down to $22, from a long-term perspective, on the long-term monthly chart, silver would still be in an uptrend. And I think that would be just a fantastic buying opportunity. In fact, I think we're already at a fantastic buying opportunity. And, any more weakness will just be, even better from a longer term perspective. But the key levels would be right where we are now, then $23.75, then $22 as far as support.
Now, I see this kind of price range that is kind of like a sideways triangle here. And it looks like to me, and I've gone over this with a few other guests, it seems like, if we have a narrowing range there, it has to break out eventually, either from to the upside or to the downside. Your perspective on the likelihood of like seeing a breakout to the upside, and if so, what happens at that point?
Exactly. And you're describing, they call it a symmetrical triangle pattern. And these patterns tend to break in the direction of the prevailing trend. And right now, the trend is still up in silver. The primary trend is up. So the likelihood from a purely statistical perspective is that this pattern will resolve to the upside. And if that happens, the immediate target becomes this $30 resistance up here that everyone's waiting for. And then, of course, once that $30 resistance is cleared, I think we could see $50 silver sooner than many people think. Now, that may seem far-fetched talking about $50 silver when we're down here at 25. So let's break up and out of this triangle first. Let's see if we can get above 30. But I think once that happens, thinking, later in the year, perhaps early next year, $50 silver is still in the cards. I firmly believe that.
Yeah. And I think it's so compelling, the argument for $50 silver, and it's quite remarkable. I mean, if that does happen, that's pretty much a doubling from where it is today. Now, kind of just for our new viewers getting in right now, we're with Steve Penny of silverchartist.com. Our affiliate link to sign up for his newsletter is silverchartistliberty.com if you'd like to support our channel along the way that way. And essentially what I'd like to kind of talk with you about is we're talking about how silver can really could break out to the upside and get to 50 pretty quickly. There's a good argument to be made there. We can't guarantee anything, obviously.
Of course.
But what about for gold? Because you've also said that gold really has this reverse head and shoulders pattern, which on a technical level is very bullish for gold, if you kind of want to get into that.
Yeah, exactly. And I'll go ahead and pull up a chart for gold here. And let me go ahead and share my screen again. And yeah, I'd say it's a potential reverse head and shoulders pattern. You know, we need to break above this 200-day moving average to confirm that. But the way a reverse head and shoulders pattern works is you can see here, you kind of got like a little left shoulder, and then this would be a head. That's a lower low. And then you carve out a higher low right here. So this would be a potential right shoulder. Now, I think we are very likely to see a bounce across the metal space. I mean, you can look at this RSI right here. We're the most oversold we've been since all the way back. We're actually more oversold now than we were in March of 2020, if you can believe that. So we're due for a bounce. The big question is going to be, how does price react when we come up towards this 200-day moving average and get to the next resistance level? You know, from the perspective of a short seller or just, you know, the people who just trade these markets, they don't have any fundamental conviction. You know, in an uptrend, you look to buy the dips. In a downtrend, those traders are going to be looking to sell the rallies. So we're going to have to clear the next resistance level and then make a new high before we can confirm a technical reversal.
Now, with respect to really what we're seeing in gold right now, kind of can you kind of repeat for our viewers your perspective and kind of the key price targets on the up if we do see this reverse head and shoulders really play out?
Yep. And you can see, by the way, we're sitting also, this right shoulder coincides with this 1.5-year uptrend line. This is a long-term primary uptrend line that, again, every time we've come down tap to this, we've rallied. And here we are sitting right at it. So we're due for a bounce here. And I do think we're likely to hold these levels. I don't think we're going to head lower, but 1675 would be the next support. That was the March low. But as far as resistance, there's really 3 levels to watch. 1920. Not only was that the recent high, but that's also the high from back in 2011. So resistance there at 1920. Then you've got this double top at 1960 and then $2,089. Obviously, that was the previous all-time high from back in August of last year. Getting above there, you know, sets the stage for a resumption of the uptrend. And that's where we can see a really big move once we get above that previous all-time high.
Again, for our viewers just joining us, we're with Steve Penny of silverchartist.com. And really what we're getting into right now is what we've seen in the last month for the precious metal markets. And it's not been the best month, but it seems like if we look at the charts, it could be very positive for the future for both gold and silver. So kind of getting into some of the key factors that have been pushing precious metals down, kind of 2 things that people often note when we see precious metals fall is often it's correlated negatively with the 10-year yield and also with the dollar index. So if you want to kind of start off with the 10-year yield, your expectation for that going forward and what we've seen recently, because that's a key thing that people look at is if the 10-year yield rises, gold normally falls, and the reverse happens if the 10-year yield falls. So your perspective on the 10-year yield currently.
Exactly. And something you just said reminded me of the saying that, you know, our human emotions often tell us to buy when we should be selling and to sell when we should be buying. So right now, you know, the sentiment is down in the toilet. I mean, everyone is pessimistic right now. And, you know, we look at these oversold indicators and we're oversold. This is the time to accumulate. Now, I'm not calling a bottom here at all. But if you believe in the bullish fundamentals and you think we're going to see higher highs, you know, a year or 2 out, I mean, I think times like this are great times to accumulate, even though our emotions maybe tell us not to. But turning to your question about the 10-year, yeah, you're exactly right. The knee-jerk reaction of these institutions and trading algorithms and just short-term traders, retail investors, is when yields rise, they sell gold. However, you know, historical precedent tells us that nominal yields are not what drives a gold bull market. It's real yields. And your listeners are probably familiar with this, but what we need to look at is the difference between the 10-year, the nominal yield, and actual inflation. And as long as inflation is higher than the yield on that 10-year, that's the fuel for a bull market in gold. I mean, that's the primary driver of a precious metals bull market is negative real yields. And I think we're likely to see negative real yields for probably years out into the future. I mean, this is a trend that's just getting started.
So this whole idea of transitory inflation that the Fed's talking about, inflation is running hot right now, but they're saying it's transitory and it'll be able to fall. I mean, you don't think that that's going to happen?
Well, like everyone wants to know, is it going to be inflation or deflation? I'm in the inflation camp firmly. However, I don't rule out the possibility of like a deflationary impulse. Very often, when you have very smart people with opposing viewpoints, what I found is that often they're both right, just in different time frames. So I don't rule out the possibility of a quick deflationary impulse followed by, a resumption of the inflationary trend that we've seen. But I have little doubt, if any doubt, that over the years we're going to see much, much higher inflation.
Now, if our viewers are just joining right now, this is Steve Penny with silverchartist.com. And really, you have this opportunity actually in the chat box here, the comment feed. If you'd like to ask Steve a question, just type in the question and we'll hopefully read it on air right here. One viewer actually has a question. We were doing some technical analysis earlier with gold and silver, showing kind of where they are, what the probabilities are of them rising or declining right now. And this viewer is wanting to know, how can we analyze a market on a technical level if it's manipulated? And a lot of people believe gold and silver is manipulated. So how can we do that if it's manipulated?
Yeah, I know you've had Craig Hemke as a guest on your show, and I think he coined the term manipulation analysis. So, I factor that into my thoughts here. So, like, for example, I look at the commitment of traders report on a weekly basis, and that tells us how these bankers are positioned. And if they're heavily short and you're running into a major resistance level and you're overbought, I mean, that just adds to my analysis. It just bolsters the technical analysis. And the same goes in reverse. If you're oversold and those bankers have covered their short positions, now they're positioned for a rally. So it's just another input that we can use. It's another tool in our toolkit if we know how to use it. And that COT data, it's not an end all be all, but it's something to factor in when it comes to manipulation.
Definitely. And kind of getting into now, looking at you, we were just talking about the 10-year yield, and really how you were saying essentially it's very bullish for gold if we see real interest rates falling, right? So that means that if there's a lot of inflation, even if yields are rising, that doesn't mean it's bad for gold. Inflation could be rising faster than yields, and then real yields are actually falling. Now, another thing that people look at as kind of a reverse correlation to gold is the dollar index. And we actually just had Lobo Tigre on the show a little while ago, and he was pointing out that really gold has been more negatively correlated recently to the dollar index than the real 10-year yield. So your perspective on the dollar index recently?
Yeah, the dollar, it's a lot of people think it's always like a perfect inverse correlation. The dollar goes up, metals go down. That's not always the case. However, in the past, let's call it 4 to 6 weeks, I don't remember the exact time that this correlation started, but I mean, they've been almost perfectly inversely correlated. We've had a big spike in the dollar, which perfectly coincided with this spike down in gold. And I've got a dollar chart if you want me to pull that up, but we're extremely overbought on the dollar, and we are due for a pullback. I mean, I think that could happen as soon as tomorrow. So, I'm looking for the dollar to fall back and, for a pop or at least a relief rally in the metals. And the primary trend in the dollar is down. We've seen lower highs going all the way back to March of 2020. So the trend is down. From my perspective, this is just a counter trend rally. I don't think like the dollar is going to be making higher highs for months and years ahead.
And another metal that is often not covered when you talk about precious metals, but it is another precious metal, is platinum. And a lot of people have pointed out that it's actually under gold's price right now, which is pretty unusual, and seeing a good buy right now for platinum. Your perspective on the recent price action we've been seeing in platinum and where you see it going in the near future?
Yeah, I've been watching this. I like a lot of ratio charts because it's measuring things in the US dollar is like you're measuring something with an increasingly less reliable unit of account. So I like ratio charts, and platinum is like historically undervalued relative to almost everything, to include gold and palladium. So I think there's a lot of opportunity in platinum. I'm kind of kicking myself that I don't have more exposure. I do have some, but platinum is way undervalued, and I think it's very likely to outperform. However, I wouldn't view platinum as like a substitute for gold. Gold is a safe haven asset that I look to preserve my purchasing power, where speculating in platinum is, exactly that, a speculation to increase your purchasing power.
I think that's such a good point because, yeah, platinum has never really been used as money.
Right.
Gold and silver have. So they're kind of like safe haven. I think with silver, it's an interesting metal, though, because it's both monetary. It's been used as money before, even probably more than gold has, but it's also industrial. So there's kind of the two demand sides of it. And so it can be speculative. I mean, people think that, as we were talking at the beginning of this live stream, that silver could go to $50 pretty soon, but it's also just a safe haven asset. It's somewhere that, you can put your wealth, and it's never going to go to zero. At least it's never gone to zero for the last 6,000 years.
Yeah, that's what's interesting about silver is, in theory, it should benefit in either environment. Let's just say, the worst is behind us. The economy is going to be great for years to come, and the debt doesn't matter. None of that stuff matters. Well, then silver should benefit from the increased industrial demand. Whereas if we do have a currency crisis, like I think, silver is going to benefit from that monetary demand. And it's such a small market. It's less than a billion ounces mined every year at $30 or $25 an ounce. It's $25 billion a year worth of silver is pulled out of the ground. That's tiny. So plenty of upside in silver. That's, from a risk-adjusted perspective, I think silver is one of my favorite. It is my favorite play right now.
Now, one of the ways to invest in precious metals also is the mining stocks, and you can actually look at the ETFs, which there's a basket of mining stocks that they track. So kind of looking at the GDX, you're actually seeing the GDX being oversold right now. Why is that?
Yeah, and if it's all right with you, Elijah, I'll go ahead and pull up a chart for GDX, and that way I can show you exactly what I'm talking about. But you'll see right here on the top right of my screen right here, this, for those not familiar with technical analysis, RSI is just a simple way to measure if something's overbought or oversold. And anytime you're below this green line, you can see that's pretty rare that happens. The last time we were below that green line, which is 30 on the RSI, was all the way back in March of 2020. So we're just about as oversold as we were back then. And you can see what happens when you get this oversold. I mean, it doesn't happen every single time, but you tend to get a nice rally when you're this oversold. So GDX, and gold miners as a whole, I think, are at fantastic long-term buying opportunities here. Could they go a little bit lower? Sure, of course. But, I think we're in a compelling accumulation zone here.
And then your perspective also on the silver miners right now.
Yeah, I like to use SILJ, which is the junior silver mining ETF. I actually own that. And we'll zoom out here to a longer term chart. And we actually lost key support here on this one. You can see this trend line goes back to March of 2020. That was the primary uptrend line. Well, support there failed. However, we're sitting above this secondary trend line. You can see right here in green, going back to September of 2020. And every time prices pulled back towards this line, I mean, we've bounced. And look where we are right now. We came within a couple of whiskers of tapping that line again. And, could we go a little bit lower? Yeah, of course. But I think we're clearly in the buy zone here. I mean, there's strong support, right? Not far below of where we are. I think downside risk is minimal relative to the upside potential. I think that's a good way to put it.
I think one of the key things is we were mentioning before how silver is money, and that's really, and how platinum isn't. Also, mining stocks aren't money,
Right.
but they are a potential for great returns if we see precious metals rise, because they often give you leverage to the price of the actual metal. But there's that distinction there of that gold and silver in your hand has so much less risk. It's pretty much a riskless asset in some sense, because it's not going to fall to zero. You have it in your hand. But then if you own other forms of investing in precious metal, like mining stocks or ETFs, or like physical silver ETFs and stuff like that, there's always going to be third-party risks. So kind of your perspective on that, like holding a safe haven and the best way to do that.
Yep. Here's my exact perspective on. So I like to say currency is for spending. That's what I use currency for. Physical silver and gold are for saving. That's for my long-term savings. Mining stocks are for speculating. And then I look at like royalty and streaming companies as more of like long-term investing. So those are for investing. And, I think a physical metal is my defense and the mining stocks are my offense. You can really increase your purchasing power and your wealth with those mining stocks, but you kind of have to know what you're doing. I mean, they're volatile. You got to have an exit strategy for one. I mean, you look back at previous bull markets, like even going back to the 70s, a lot of the newsletter writers and gurus who were talking about the metals for years, the vast majority of them had no exit strategy, or if they did, they failed to execute it, and they watched their mining stocks come right back down. They experienced these massive gains, had no exit strategy, and then lost all their profits. So always have an exit strategy would be my advice when speculating in those mining stocks.
I think that's such a good point. Yeah, you definitely have to have different approaches in different investments. And, like you said, some are super speculative and you have to have an exit strategy there. Well, Steve Penny, we really appreciate your time today. Before we let you go, did you want to share with the viewers where they can sign up for your newsletter and any last thoughts you had?
No last thoughts, but appreciate it. It's always fun visiting with you. Doing these live YouTube videos is pretty cool. Yeah, we do a weekly free newsletter. Goes out every Sunday. It's totally free. We don't spam you. With the goal is to provide a ton of value for free. And we set up a link just for your listeners. And I think it's silverchartistliberty.com. And there is a premium version available, but there's never any pressure to upgrade to that. But it's super low ticket. We make it affordable for everyone. And that's where you get a fully transparent, over the shoulder look at exactly what I'm doing and why I'm doing it. So thank you, Elijah. Really appreciate it.
Definitely. Thank you so much for your time. Yeah, that link is silverchartistliberty.com. You'll be supporting our channel along the way as well. And if you're interested in acquiring physical gold and silver, you can call us at 1-888-81-LIBERTY. That's 1-888-81-LIBERTY. Stephen, thank you so much once again for your time, and we'll talk to you soon.
You bet. Thanks, Elijah.